And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Welcome back, everybody. Happy Monday, December the 13th. I'm John Hoagland. As always, thanks for trusting me with your time. As always, we're going to be looking to find accurate context. Always think about good risk management and remaining patient in our trading. If you're in the markets already, hopefully things are going your way. I'd like to see everybody get off to a good start this weekend. Just a note to begin, please say a prayer and donate if you can to all those that are in the wake of those horrific storms and tornadoes that hit the Midwest this weekend. Sure, we're all aware of it, and I know I'm keeping prayers pretty close. As far as economic news this morning, nothing impactful. Nothing at all, really. Just a couple of short time frame bill auctions. But it is a busy week. We have PPI tomorrow, Producer Price Index. Wednesday and Thursday are the busiest days of the week. 7:30 Central Time, retail sales comes out, Empire Manufacturing Index, import-export prices, 9 o'clock business inventories, and housing market index come out. 9:30 Central, the EIA petroleum status comes out. 1 o'clock Central Time, the FOMC announcement, and 1:30, the Fed chair press conference. Thursday, housing starts and permits, jobless claims, Philly Fed, industrial production, and PMI all coming out Thursday morning. EIA nat gas, of course, at 9:30. And that's going to be it for the week pretty much, but it is quadruple witching, which means Friday we're going to have lots of expirations, and sometimes that creates a little bit of havoc in the marketplace. Yep, quadruple witching on Friday. Looking at the markets this morning, U.S. equity indices are set to open the week higher as data about the Omicron variant is basically saying it's not as deadly or severe as previous strains. So that's always good news. Of course, we're waiting for the FOMC release on Wednesday, along with not just the FOMC. There's a lot of foreign banks discussing policy this week. So we'll be trying to keep an eye on all of that. This is the last week of the year for the market forecast and for the market recap. We're going to be taking a couple of weeks off. I know you guys are going to probably be taking some time off yourself. I know I'll be missing you. I knew Fred was going to be here because the Packers beat the Bears last night. I see you, Fred. Yes, Green Bay Packers are publicly owned by their fans. Owned by the Green Bay Packers. I knew you'd have come up with a good one this morning, Fred. I appreciate that. Oh, my goodness. Oh, my goodness. All right. So, as always, on Monday and Wednesday, we have group coaching. We're going to put in the link for group coaching there so you can join me today at 1 o'clock for group coaching, and again on Wednesday as well. So, I look forward to seeing everybody there. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome. You can get notified when we do go live on YouTube if you subscribe to our YouTube channel. A brief look at the VIX this morning was up a little bit above 2%, 1915. Dollar index slightly up 96.31 last. And the yield on the 10-year slightly lower this morning at 1.47. What all that means, we're going to have to figure that out. I do want to mention something. We've got a potential major change in the nat gas market this morning. We're going to take a good look at that. Got to say good morning to everybody. Nico, first in the room, you win the prize. Lorraine, Brian, Jim, Chris, my brother Rick, good to see you. Yes, Chris, always looking for that excellent finish to the year. Will, good morning. Charles, Adam Lake, Drew Templeton, good morning. JB, Jeff Mullins, George Adams, Vince, good morning. Ron, Mirik, Mr. Idris, good to see you. Sarah, George, Dead Letter Opener, Norman, good to see you. Terry King, Emmanuel, good to see you. Kevin, Andres, Frederico. Yes, hopefully everybody in the storm is okay. That's for sure. Jerry is awake. Hopefully John is too. Dr. VJ, good morning. Mike talking about a market storm. Dante, morning. Fred, I had some hopes for the Bears last night. They actually held up better than I thought. Looked like they were, for at least for the first half, giving Green Bay some competition, but not this time. Not this time. Isaac, Mo, good morning. Ashton, Chris, Ednelson, Devontae, always a pleasure. All right, let's jump into the charts here. So we're going to start with the E-mini S&Ps, so maybe we can see if there's any opportunity in the opening range trade for that crude oil market at 8 o'clock. Here's the charts. As always, starting with the daily, this being the S&Ps. Oodles of data throughout this week. We're at the end of rollover. The December contract will expire on Friday with the quadruple witching. Poised to trade to possible new all-time highs in the futures here. We got the all-time high trade here at 47.35. We get pretty close to it in the overnight session. But as long as we can hold above that weekly kickoff low, or high, actually, which is 47.09, it's going to be marking acceptance of higher pricing. And we also have a late spike. I love it when that happens because it's such a strong nuance, if you will. And we're going to be looking for opportunities off of that late spike this morning. Volume in the open interest still somewhat rollover related. We added 90,000 in open interest on Friday. Believe me, that's not all directional. A lot of that has to do with the rollover. I'm going to say that on Friday when we expire, we're going to lose somewhere around 500,000 in open interest. It's just a function of the marketplace. So don't think that we had a whole bunch of new buyers coming into the market here on Friday. Again, a function of rollover. Let's look at the 30-minute chart here. So here we've got our weekly kickoff high, okay, 47.09. 47.1050 is our overnight low. We've got a gap. We also have the late spike. The late spike is when the market moves very quickly higher right at the end of the day and doesn't have the opportunity to mark acceptance of that higher pricing. So we look to see where the market opens on the next regular trading hour session. If we open in or above the late spike, it's an indication or a probability that the market is accepting higher pricing. So we've got some overnight longs here, of course. If we can hold above the weekly kickoff high, of course, that's going to be a nice spot for us to look for a long. But if we can't hold there, if we can't close the gap relatively early, it's another opportunity for us to look for longs. There's always the possibility that this market could come back in, trade inside the late spike. High of value from Friday, I would say, is the base of the late spike. That's 46.92. So there's lots of kind of possible entry areas. We have to be careful to limit our risk. If the first one doesn't work, what do we do? How do we recognize the change in the marketplace is really the question. So we can come all the way back down here and still be part of the late spike opportunity. It's acceptance and value from Friday that would tell me that, okay, our late spike special situation may not be playing out. So we got to be cautious. We've got to be looking for opportunities. I would really like to see if the opening range were the low of the session in the E-mini S&Ps. That would be a first sign. Okay, we're going to start looking for longs right off the bat. We're opening out of range, out of balance. The opening range is one extreme or the other. That can be indicative of buyer or seller control. That doesn't always, can go on all day. Let's take a quick look at the Nasdaq before we go back and look at the crude oil. Okay, Nasdaq. We're waiting for a lot of data. Weekly kickoff high is presenting a little bit of resistance, at least in the overnight trade. Weekly kickoff high 16,420. So not a real close look at it. Acceptance above that puts us right where we are in the S&Ps with a potential another nuance that says this market is going to continue to roll higher. We do have a late spike, volume and open interest, no help again because of rollover. 30-minute chart. So the Nasdaq has been presenting weaker than the S&Ps. It's showing that now with the fact that we have been unable to trade up to or get above weekly kickoff high. But we do have the same situation in the late spike. And when we call the late spike, the high of value here is 16,287. Settlement here, 16,331. We've got overnight longs. We're opening with a gap with a pretty high probability of it. Watch the opening range trade. Watch the opening range trade. If the opening range is left at the low of the session, that may mean we've got buyers coming into this market, accepting higher pricing, looking for the market to continue to move to the upside. Okay, we've got a little bit of a stutter step here in weekly kickoff high, which is, again, 16,420. If we're looking for volume nodes, we've got to go all the way back inside of value down here to the point of control, which is approximately 16,252, 250. Yeah, approximately 252, 16,252, 51 in there somewhere. So again, opening with a gap. If we can't close the gap relatively early, that's a nuance that says we should be rotating higher. With the late spike and the opening gap, it's just another nuance that says there's a pretty good probability that we're going to continue this move to the upside. Nothing, of course, is finite or for sure in futures trading. We don't have any news coming out, but we know the next couple of sessions, tomorrow and Wednesday and Thursday, we know we've got a lot of data coming out. So there's likely going to be some posturing and positioning for the FOMC announcement on Wednesday. Of course, there usually is. So we're going to be, again, watching that opening range. Let's go back now and take a look at the crude oil. And we can watch that first minute of trade, although I don't think that there's any great opportunity here. It's scheduled to roll on Wednesday into Thursday. Watch the volume. It's okay if you don't move over right on time. Just keep an eye on the volume in the morning and trade the one with more volume. But we've got range bound, rollover range, obvious. Last week's high and low are really the extremes, as well as the weekly kickoff high at $73. We took a look right at $73 in the overnight session. So 73 is the upper extreme. 70-30 is the lower extreme, and we're right in the middle of it. So that's what tells me I don't think that there's any really big reason for us. Oh my goodness, that chart went away. I lost a lot of these charts for some reason over the weekend. Let's see if we can pull it up again. But here's the 30-minute chart. Here's the lower end of the range. We should have there's weekly low. This area down here looks interesting. There's a gap. We had a late spike that created this gap. This was a late spike similar to what we've got in the S&Ps today. We open above, we open with a gap. We can't close the gap. We don't check settlement. The market continues to roll higher. So 73 important inflection level, 70-30 approximately the low end of this 4-day rollover range, and we're opening in range and in value. So again, that tells me I don't really need to be all that aggressive early in the session here. Let's see if we can't bring this up. We're going to the 1 minute. No, we're not going to catch it today. I'm going to have to put this back on the charts. But again, I don't think that there's any real reason for us to feel pressure to get into this market right off the open here. We're in range. We're in value. We're centrally located in the overall short time frame area of balance and extreme. I'm going to chill. I'm just going to let the market establish an early range and then work the extremes of that early range. Hey, I see Ray is with us today. Good to see you, Ray. Yeah, let's take a look at gold. All right. Still, again, range-bound short time frame control. The pink lines engulf last week's range. Pretty much almost the week before's range as well. We're centrally located in last week's range. We're inside, of course, weekly kickoff high and low. 1820 the high, 1770 the weekly kickoff low. We have anything big going on here? No, we don't. There were a couple of days last week when I said that gold was off limits. At least for me, it was off limits, and we didn't really see any great opportunity there. And I think we're still kind of in that area where we're going to have some random activity, some short time frame control, and some short time frame levels that may or may not be respected. We added 36,000 or 3,600 in open interest on Friday, which that's something new. We had just a stagnation of open interest, and for the last few sessions, we've seen some more interest and more business coming in. So I believe that there's a change coming. I'm going to have to wait and look for the extremes to see if and when that is going to happen. Take a look at the 30-minute chart. Had some overnight longs. Obviously, they've gotten out. I believe our opening range was the high of the session, but it just took us back into range and value. It was a pretty decent trade. I'm not saying this wasn't worthwhile, but it just took us right back into range and value. If we've missed that, now we're really just kind of stuck, just waiting around to see if we can set up some sort of daytime frame structure against some past structure to look for an opportunity to limit our risk. The market just got too long, overnight inventory too long, right back into value. Let's take a look now at the final three. Euro rollover range continues. Last week's high and low are probably the extremes I'm going to be focusing on in longer time frames. We added 8,200 in open interest, again, a function of rollover. So we're really kind of range bound. I'm not really that interested in in rushing into anything here. I'm going to be patient and wait for the extremes or wait for the initial balance, that first hour to establish itself, and then look for the opportunities at those extremes. I don't think that there's any really big opportunity here in the euro. Here's what we did last night. It's settlements all the way up here. So that settlement is 113.38.5 ticks. We got pretty short in the overnight. London session opens. We start to unravel those shorts. Are they unraveled or not? I don't think it really matters, because here we are. We're right in the middle of value, and we're right in the middle of a longer area of value as well. We're very, very range bound. So not saying there's not opportunity, but I'm going to have to be patient. These are the trades that I can't look for. I have to just let them come to me. I have to just let them come to me. Think about that. What about the 10-year? Same situation. Long time frame balance remains. All of this is largely just longer time frame range bound rotations. Last week's high and lows are really the extremes that I'm starting to think I might find opportunity at. We added 8,200 in open interest on Friday, but still centrally located. Not, it's like the tennis player. The tennis player is always coming back to the center of the court so that he can easily reach the next volley that comes at him. So the market really just kind of hanging here. I don't see that there's any great opportunity. Again, no real overnight inventory. We're in range, inside of value. This just screams to me, let's just hold off and see what happens. Maybe we can, find a short time frame level from today's activity, from the profiles today, that lines up nicely with something, in past profiles. I don't see that there's any great need to get involved here this morning. Inside range and value, I'm going to chill. And a lot of this makes sense because we know the next 2 days, next 3 days, there's tons of information coming out. All right, so let's take a look. This is what I was talking about last week. We had a weekend gap to the downside. That created that gap. We have 5 days in range and in balance. And now in regular trading hours, we're going to be opening with a gap, which creates an island low. If we accept above weekly kickoff high, which is $4, then this could end up being a major reversal pattern, and we could see prices begin to rise swiftly to the upside. Take a look at the 30-minute chart. So here, hang on, let me just make sure this is good and visible for everybody. So here's that weekend gap. There's nothing here because the market closed here on Friday, opened here last Sunday night. We range, okay? This is the gap from a week ago Monday through Friday, last Friday, and we're opening with a gap. We've opened with a gap. If this gap doesn't get closed, then we've got an island bottom. Look at how much there is to look at up above. I mean, we've got one or two naked points of control, but when we came down to this, we came very quickly, very aggressively, leaving gaps, leaving unchecked points of control all the way up. There's so much visual repair above this market. It's just a matter of timing. If we close the gap, value high is right at the high of the range from Friday. So that could be a value area special situation play that could bring prices lower. But as of right now, we're holding the gap. If we can't close the gap relatively early, I'm looking for opportunities to look for longs and to see this market go higher. Nothing that I say or that I do or that anybody can say or do is going to guarantee any particular outcome. So we take the nuances, we take the information, we establish a hypothesis. We say, if this hypothesis looks like it's beginning to come true, I'm going to trade to that hypothesis. So if I were trading nat gas today, I would be looking for an opportunity on this pullback to look for an execution. An execution. Mike, my grandmother liquidated a half of her 401k. Seems very concerned about recent market development, and she's 97 and seen a lot. Wow, what a great resource to have, Mike, is a grandma with that much experience. And me and my older brother Rick, who's I think watching, had the same benefit as our dad's mom. Died at 101. She was born in 1899 and died in the year 2000 or 2001. I forget, but yeah, she was alive in 3 centuries. And you think of the changes that these grandmas have seen and the experience that they have. Three Lions, Columbus. Nice to see you, Jamie. Good to see you. Yes, Juan. Nasdaq weekly kickoff is now in the resource library. Yes, the weekly kickoff email as well. Glad that you're happy that that's there. Hopefully it's going to help. Hopefully. Yes, no guarantees in trading, that's for sure. It's one of the things that is so aggravating and yet so fascinating about trading. You know, we don't know the outcome of anything, and when we hypothesize and act correctly and we profit from it, it's wildly satisfying, of course. It's just getting through the tough times it's really high highs in trading and really low lows sometimes in trading. But surviving it all, I think, makes us a little harder steel, a little thicker skinned, and we find our way through all this, don't we? Right, so we're in pretty good shape here. We got about 15 minutes here before the open. I don't have anything left to mention. Joe, I've used several different trading platforms. The platform that I'm using for the market forecast here is TS Trader or Tradeovate. I also trade on T4. Low of the trade so far, opening range, long trade in CL. Yes. Hooray. Cheetah does not always get the gazelle. Absolutely. Sometimes the gazelle gets away. And the only thing guaranteed in trading is no guarantees. Absolutely. So let's take our deep breath. It's going to give us a little bit of time to kind of watch the markets and see what happens here before the equity open. Stay humble, grateful, and creative in your trading today. Remember, say a prayer for all those in the wake of the tornadoes and storms in the Midwest. Just terrible. Be kind to yourself. Be kind to each other. You'll see Dan for the recap today. You'll see me for group coaching, and I look forward to seeing you there. But until then, trade well, get out there, and profit. Have a great trading day.